What's going on, everybody?
Oh, that's loud.
Oh, damn, I'm not signed in anything.
$125. Okay, Chuck. Good evening, everybody. George. Yay.
So I'm just getting Trade Station booted up here.
My account's still foobarred. I'm just going to have to start over, I think. I don't know what happens.
Oops.
Chuck, you must, yeah, okay. You're talking, 125, 130 on Friday.
I mean, yeah, Chuck, the thing I'll say is, like, obviously this is hindsight, but, like, you can see a lot of call activity coming in when you got those moves higher. It wasn't necessarily through a key level or anything like that. It was just above the transition zone. Looking at the market trend model, maybe there was something there, but, just because we get those big buying bars doesn't necessarily mean that it's dealer adjustment bars. It could just be algos playing against themselves, like generally we care more about the dealer adjustment bars when they're through like key levels. Like you see dealer adjustment bars through P-trans or through the top of the drunken sailor range, right? So I would get hung up on, every single, 5-minute bar that looks like it's bullish engulfing, thinking that's a dealer adjustment bar.
Yeah, agreed. I just a 40,000 foot view though, Chuck, on the the MTM was up, structure was conducive of moves higher. So I mean, good evening, Paul.
Hi.
How was your weekend, Paul?
Pretty good.
Right on.
A lot of work here actually, but that's good.
Open.
How was yours?
It was fine. Freaking spent way too long figuring out how to get that car seat installed in the car.
Welcome to parenthood.
Yeah, I was like, so I bought a Volvo to make it easy to put the car in. But then I was like, feel like I'm about to snap this seat in half. I'm exerting so much force. And then sure enough, like some stuff got out of whack. Had to reset it, regroup, change shirt, sweated through the first. And then we got it all situated.
Yeah. Been there. Done that.
Well, yeah, back in your day, though, these new ones are just supposed to be, snap right in. I see these people on the internet like, 5 seconds.
Yeah.
I was like, clearly I'm not doing something right. So, no, all good, though.
Just don't use car seats. It's fine. I didn't grow up with a car seat, man. Come on. In the 80s, we didn't have car seats. What are you talking about? Just lay in the back seat. You're in the back of the Pinto, man. As long as you got some.
Dude, in the 70s, man, it was like, here, hold my beer.
Yeah.
Michigan roads in the wintertime, safety belts optional.
Illinois, same way. Yep.
Yeah. Well.
That's funny.
All right, what's on everyone's mind?
It is funny. Yeah, I'm getting the tick loaded up here. But yeah, to the extent there's some questions.
Okay.
Paul sounds like Ferris Bueller's Day Off.
Oh, let me tell you, I'm pristine compared to where I was.
Yeah.
I was about to say, are you over it yet or still lingering?
Still lingering.
Yeah. I mean, I don't know if you had the flu, but I hear from a lot of people down here that they've been getting it, so.
It's nasty. I did go swimming today, though, so,
Oh, heck yeah, there you go.
just enough to get my head wet, get back in the water.
Hell yeah. Well,
Rode for an hour yesterday just to get my legs.
always starts with one, making progress, 2 in a row.
That's it.
So, yeah, lucky you. I strained my calf last week pretty good. So, I had to bow out of my race, so don't be laughing, Michael. Pretty sad about it.
You did really? Oh, dude.
Yeah, I can't run. No, I'm not trying to blow out my Achilles heel.
Oh, dude. I'm
I have to echo what George said here. The cars back then were made out of concrete.
Yeah.
Yeah, the family car was a Olds Delta 88, right? The thing was a boat.
That's
nice.
Leaf springs and shock absorbers to float over anything.
Yep.
Yeah.
So getting into it, if you have any questions, let me know. Chuck, let me know if the answer we gave you was sufficient or not. Didn't see any comments back from you yet. But yeah, Friday obviously was a constructive day in the market. Let me reorient my market trend model for you guys. I mean, linear up day, no doubt about it. Cumulative tick by linear up, right? Kind of 45-degree angle, evidence of, sustained buying throughout the session. To boot, we had filtered tick, linear up day, which, is great to see as well, which that means just needs large sustained buying throughout the session. We broke above, the key transition when we're looking at the top quartile in the SPX game plan. Going here, right? SPXP, the top quartile, something new that we're really leveraging, right? It just quickly identifies where those where the meaningful expirations in the structure are. You can see that's, 76% of speculation is housed within, those 10 expirations probably. 6930 was the top of the DEX transition zone. Got well above that. 52-week new highs outpacing new lows. So really kind of all the signals that we look at here were, pretty bullish at the open, breaking above the key level. Not really a ton else to say there. I got above the, our key Drunken Sailor range, all that good stuff. I mean, just watching the movie, right? We can just see the call, centroids, call, Linfit line, just expanding throughout the session as well. Key kind of 45-degree angle in the put centroid, is evident throughout the session as well. And that's the exact signature we see on a sideways to higher day. A lot of the times is that put centroid kind of railed 45-degree higher, and the right calls, just making their way progressively throughout the session. Paul, Mike, I don't know if you guys had anything else specifically you wanted to touch on Friday, in terms of the context of our tools or anything y'all were looking at or folks in the Discord were looking at.
Yeah, I think the question was, would we kind of stall out at that horizontal call Linfit line, or were we going higher? And I asked folks to take a look at the slope chart, the Spec P slope chart, so Spec PS. And as soon as it cruised over, it's the top one there.
This one.
Right there. Yeah. As soon as they cruised over the zero line, it means you're trending up. So anytime you see that thing shifting and not being horizontal, speculation is above or below. Why does that matter to us? When we see speculation occurring above and it's pulling that line up, people are still optimistic. They're still doing whatever they're doing. Now, you can look at there's not a lot of information in it because it was fairly constant throughout the day, but where that distribution is the chart that was just underneath this one. Yeah, that one right there. And, we're getting up into the lines. The lines are more or less horizontal. There was a little more speculation above and below wherever the price was, but, for the most part, it drifted up, which tells you that people were kind of following price up, and the people who were in the money at the 50 delta, so that's most likely those folks when price is up in those upper lines, they have no incentive to sell except if we get a news event that pulls us down, right? They lose their 50, 60, 70 deltas. But now theta's just burning. I think that's what we saw. And so by the time the comment that I made on Friday a couple different times, by the time we get up into those lines, a lot of the move has already been done, right? So speculation, if you're going to speculate on a 3-to-1, 4-to-1, 5-to-1 reward risk, it's when you think we're going to go up and then letting it just melt up into that. The theta decay of the day just kind of melts things up in your P&L and your verticals, and then price also, just drifted up. So
Yeah.
The other thing too, sorry, I didn't want to monopolize this, but
Go for it.
the network, the net stat indicator went all green, and as soon as it went green, that's all call dom. All calls in the left-hand plane, all calls in the right-hand plane. Puts her in a minority. And once puts go into a minority, we tend to drift up. Even though Charm was always with a headwind, we had Vanna was just collapsing, or Vanna was carrying the weight. Volatility was collapsing, and we talked about it in the morning notes, talked about it throughout the day. I mean, it's really those three pieces, right? Just watch NetStat, watch a few of these charts, and you get a pretty good sense of what's going on. I know some people made bank Friday, so that, kudos to you. That's great.
Yeah, and I mean, just because Charm is larger doesn't mean the market can't go higher, right?
Yeah, well, especially with a drop in Vanna, right?
Yeah.
Or a drop in volatility. Vanna's carrying. See how imbalanced Vanna is right there on that picture?
Yeah.
So what that means is that if you add calls, and clearly we were adding calls, so not only was the structure already imbalanced to favor volatility, we have plenty of learning literature on the role of Vanna. Vanna behaves as does Charm, but it's opposite. As volatility comes down, Vanna amplifies. And so what's being amplified? The stuff on the right, where the calls are going. So all the right-hand side, as calls are being poured in on top of that, we've got more and more deltas, long deltas. And those are from our perspective, the trader's perspective. And when that's happening, we get longer, dealer gets shorter, all things considered, there's a natural drift up. And so Vanna compensates for the Charm headwinds. I think we saw it over Christmas. We saw it here. It's real. There it is. All right, I'll shut up.
Sorry.
Mike, didn't mean to take your thunder there, buddy.
I lost you guys on my screen. No, I think that makes sense. I don't know, a couple other things looking at this chart, right? Kind of coupling. I don't know if people are still struggling, kind of coupling, I guess, like this chart with this chart, right? Because what this chart to me is this kind of connects the dots between, like, if I was just to look at this chart, this kind of tells me like where we are, and then this kind of tells me like where we were and where we've been and where we've come
100%. 100%.
Yeah. And then this chart, kind of using this, like, I don't know, you can kind of see like, right, the 50 call 50 line, like probably likely we're not going to be getting above that line.
We do sometimes when there's just so much bullishness in the air. And we've had a few days where bearishness, where we've just sold off hard. But the difference between the two, let's just make sure everyone's aware of this, right? So in the Vol M chart, chopstick chart, the Linfit chart, however you want to describe it, I don't care how we describe it. See that leftmost where the straight lines come back at 935, right all the way at the left-hand side? Yep. Not the actual call centroid, but the actual line, right? The Linfit line for each of those? Yeah. It's anchored. That doesn't change. And so what happens is as the day comes, you've got this thing going on, but it's with an anchored point. That's different than the other chart. Go to the other chart.
Which one? This one?
No.
Oh, this one?
Yep. It's not anchored. That one's independent. Every 5 minutes, it takes a look at what is the speculation that's out there and where's it distributed. It's literally the Vol D chart measured.
Yeah.
And the C50 or the P50 means 50%. This is, think of a bell curve. We're plotting 1/2 of the bell curve. So where the Linfit lines are, and they kind of project out what the ending price is going to be for the end of the day, this one's telling you, are we staying on track to do that?
Yep.
That's what's pretty cool.
Yeah. Well, yeah, that's what I was thinking, though. Like marrying it up, which, yeah, I'm just thinking right in the context of like, whatever, selling premium, putting butterflies on, or, intraday scalping, whatever, just seeing like how aggressive it may get to the upside.
Yep.
Kind of just seeing, even if we went back in time, like that Linfit line's probably not aggressively moving higher, right? Like there's kind of that flat top going on at like 69.80. And then, just saying, looking at this speculation, right? Like there's really half the speculation is occurring below 69.80 for most of the day. Yep. Even if you look at it like at this point in time, right? It's just probabilities. That's all we can do. So at any point in time, right, looking at, this chart, well, whatever, we'll actually just go back in time so you can see like what it actually looks like.
Yeah, there was a request by one of the members to actually split these out into their own channels. So once John comes back off baby leave, we should make some.
Yeah, but it's nice to see them all in one spot.
Yeah, I know.
We can talk about that, but
yeah, it's lots of nice things to.
Yeah, I don't know. It's really nice just being able to see it all in one spot. Like that's. But anyways, like looking at this, right? We have a flat top, not a ton of speculation has occurred throughout the day. 69.80, all else equal. Not seeing speculation above that, and then going to this here. 69.80, obviously understanding spot prices, moving higher there, but that's the information that we have at the time. So that's what we got to work with,
Yeah, and the expectation, just open that up again real quick. Just, our expectation is these are monetization zones, whether they occur on the bottom or they occur on top. And we generally bounce off C10. Not always, of course. You're not doing it here. But the higher you get up, especially looking back across where speculation was, remember, each one of these lines is only separated by 5 minutes, right? So in the horizontal, they're all independent. So if the market started speculating wildly, like you see in the, kind of randomly closing puts, and that's why it's so wide and kind of dispersed down there, but the calls are really focused. The market is saying, gimme, gimme, gimme. And they're in a really tight band. They're in a tight band every 5 minutes. It's not changing. So now you're one of those traders. You say, based on the GE data, I'm going to go ahead and I'm going to do a naked out of the money call at C10, just for instance, right? And we'll forget about decay and all that crap. Now, you go through the day. right? You place that at 10 o'clock at, say, 69.65.
Yeah, whatever. Yeah, down here somewhere.
Yeah.
Yeah.
And you placed it up at C10. Now you get up there. You got to make a choice. You just went from a 5-10 delta to a 50 delta. That's a lot of gain in the SPX. You got to figure out, do I want to monetize? So when price hits that C10 line, those C10 players are close to a 50 delta. What do you expect? That's the point of maximum convexity for gamma. Why not take it off the table? All you're going to get is theta decay after that. So we do see monetization when we start getting into this area. Now we go to C20. That's where 20% and below are. All those people who transacted earlier are now making a decision. We go to C30. Even more people have to make a decision. So each one of these becomes progressively a zone of greater potential monetization.
Yeah.
Our expectation is that we're not going to go over C50, the center of the bell curve. Sometimes we do. Sometimes the market just says go, go, go. People are just adding and going, and price takes off. But most of the time, we see this. You kind of get up in there, and then you start coming down.
Yeah.
That's pretty cool.
Yeah, that's what I was going to add to it is, yeah, you're putting the position on here, and, you know, we ramp up to your target. Maybe it's your target, maybe it wasn't at C10, and people are like, oh, but we could keep moving, and I can keep making more money. But, like, that's not
This
the
is
point.
the greed component.
Yeah, the point is you have to think about this your system over the next 1,000 trades. You can't think about this single trade. And repeatedly, we see that when we start to interact up in these levels, generally there is a slowdown of price appreciation for the reason that Paul just gave. Yes, sometimes, not very often, you get up here and then you see a massive ramp for whatever reason, right? But that's not you can leave runners on to try and capture that, but like for a systematic system in the way that we use the tools, we're here to tell you right now that when we start to interact here and you have gains and you made a nice trade, like this is the spot to consider, you know, locking in some of those. Because yes, if you want to be greedy, you can hope and pray that it moves higher. Hope and pray is not a strategy, and we don't have a tool that can help supplement that confirmation bias if you're hoping and praying. All we have are tools that help, you know, kind of showing what is actually happening, and then giving you our knowledge of watching this stuff for 4+ years of what does tend to happen. And then from there, you know, hopefully you're making, you know, good educated decisions.
Bingo. Anyways, it's a pretty cool visualization, I think. I mean, it's really the Vol-M data, but it's also dynamic. And we had that question on Friday or yesterday and Saturday. And yeah, I mean, you can think of it as adaptive. You know, as the market shifts, it's going to shift.
Yep. 100%. Yeah, I mean, that's where the you can almost think, like, back to the SPXA and SPXP, like the Linfit line here is almost like SPXA. It's the cruise ship. Like, it's going to take a lot, especially the further you get in the day, to move that line. But you can see in this, like, right, this is a speedboat. You're going to see quickly, you know, if we get those shifts as well. And then obviously you can see that in the centroid, right, as well. Like every 5 minutes, you can see what the centroid's doing, but this kind of just gives you a kind of a deeper dive into what kind of the composition of that centroid. Is that right?
Yeah, indeed.
Yeah. Cool. Does that make sense, everybody? Do you have any questions on this? This is kind of relatively new tool we have going on. Vol-M, you know, Vol-D stuff is not anything different, but, you know, kind of these derivative tools of that and going a little bit deeper is something new. So I want to make sure it makes sense to you guys too.
Well, and this goes to kind of the themes for the people who are in the Discord. We had really kind of an extensive discussion yesterday in multiple channels, right? And it was related to swing trading and the SPX. And, you know, I won't ruin the discussion by revealing it. You're going to have to go read it yourself. But one of the key things, though, is just the SPX turns over every single day, right? 50% of it is there, right? And so you have to know what participants are doing. It's not like a stock that has Friday expiries, or the SPXA, which is a monthly. By the way, it settles out Friday morning this week, so it's relevant also this week. But when you have a tool that gives you visibility of what is kind of going on in the day, if you make the choice to trade 0DTE, this is a fairly important tool to keep your heads, glued onto. I have a screen that's opened up that's streaming the channel that Taylor's showing, right? Or was showing.
Yeah.
I just watch what pops up every 5 minutes. I want to know what the market's doing. I really want to know. And this, to me, is kind of like, remember in The Matrix when he was looking at the screen, and it was our first view as watchers of the Matrix series, the green falling letters and symbols and all that stuff, and a story was going on, and I forget who the actor was, the Timmy, or I think was his name, or whatever. Anyways, he was able to watch that, and he knew exactly what's going on. The more you watch Val-M, Val-D, et cetera, these spec PA and PS charts, PD charts, you really get to know the story, and that's pretty cool. So I would, if you're having some struggles with it, ask questions, and we'll get on them, because I do think it gives you some visibility. If you're going to trade the SPX intraday, gives you a really good clue of what's going on at any one given moment. All right, I won't say anymore.
Well, yeah, and I guess the last thing is, understanding like the trend, right? Because I know, there's other things out there where, you're just kind of looking at like, the day has just been like premium being bought all day, right? And just like a trending higher premium, and like, you're supposed to somehow indicate a trend of that. But I think this is valuable too, because we're looking inside of that to understand, okay, cool, but like, what is the distribution at the specific strikes that activity is taking place? And that gives you a whole lot more information, because yes, premium could have been bought all day, but we can see that there's a pretty firm cap on where that was taking place. So again, all we can do is give you tools to kind of understand at what strikes the activity is taking place. And then, kind of, again, the Game Edge community is good about saying, okay, these are the observations historically of what we've seen happen there. And then from there, right, it's up to you to make a trading decision. So if you think we're going to keep mooning higher because premium is being bought in all day and there's a line that's going straight up, and that's fine. But yeah, it's just, different tools, but, we're here just to, kind of help, dissect the way that we look at the market, and hopefully it brings you value and improvement to your system.
How would the market behave differently if instead of monetization at those P10 50 levels, they were short the calls? So it's a great question, JB. Every night we look at short interests. I can say with 100% assurity, the narrative that native options are short calls and long puts 100% of the time is malarkey. We get CBOE data, end of day data, that tells me what the market makers are doing on the buy, sell, open, close, puts, calls type. And then it's also split into the participants and classifications of participants and their registration, their size, and things like that. I can categorically tell you, yes, there is some shorts that are going on, right? I mean, we talk about it in Gamma Edge all the time about shorting above, say, C50. I will also tell you it's not in the majority. It ebbs and flows. Now, Friday was a pretty active day because it's a Friday and there was a lot of open interest. Other days, not so much. And so your question, it's a great question. What's it look like if they were short the calls? If they were 100% short the calls, then we would have effectively a magnet type of condition. We talk about magnets, and there's a whole series within the technical questions that answers that. I can tell you, if those folks are short those calls and they violate those calls, they're in trouble, right? I mean, they're going to lose money. So instead of making money, they're losing money. So certainly there are short spreads that are up there, and the short strikes get violated, and then they have to figure out what they're going to do. Is the market going to pull back or not and save their short spreads? There's flies up there, a lot of flies actually. Flies, for those who aren't familiar with options, are long, two shorts and long, and so you get these strikes in the middle, which could be positioned right in the middle of C10 through C50, which would be short. No question about it. And because of the balance 1-2-1, you would actually see heavier concentration in the middle of that band. By themselves, the middles of those flies will also act like a magnet with some balance on either side. I won't go into all of that, but we've talked about that before, what that means in terms of net delta. In the big picture, let me just say this. All the data supports the following. Yes, there are short calls up there. 2, they're in a minority. 3, because they're in a minority, they're not really impacting the behavior. They're being absorbed. And then the closing of those calls, for whatever reason, when people close those spreads or close the short legs of the spreads and record those losses, most likely they're recording both sides because the long side would have appreciated in value, offsetting some of their losses. Most cases, those people lick their wounds and come back a different day. Think iron condors and things like that. We're not seeing a major change in behavior, not nearly of the magnitude necessary of the volume that we see throughout the day. So I'm not seeing short interest at a level where I think we're at a market top, at least not yet. We a couple weeks ago, we were getting a rise in short interest, but this first week back from January and the market's taking off, this is just market dynamics. Everyone's gunning for 7,000, right? Everyone wants 7,000 to come. And but like George said, we're probably gonna touch 7,000 before we get, start going back to 65. I think there's some truth in that. So, we'll see. JB, let me know if that answers your question or not. Why don't you guys talk a little bit about some of the changes you brought to the swing trading channel and how we're thinking of evolving P2P and some of the P2P and other scanners.
Taylor.
Oh, sorry, I muted.
That's right.
Yeah, so I meant to say Mike and I are talking about that later, or after this. But we were chatting Friday evening, and we're just one change is right. Notice there's a little bit of commentary happening in the P2P strategy, P2P management that was kind of derivatives of P2P, the strategy. And so, we made the announcement. We are going to make it such that in the P2P strategy, we are only talking about the 100% mechanical P transit plus GEX strategy. That's all that's going to be talked about here, right? That's where we get the signals like tonight that we know what we're going to be doing tomorrow. Same thing with the wheel strategy, just discussing wheel strategy there. And then up in swing trading, it's called swing trading game plan. We can rename it, whatever, to make sense. This is where the more discretionary type swing trading can make sense, right? We understand that not everyone wants to follow a 100% mechanical system, right? That, has whatever the duration is on those trades, 30, days or whatever, yes, it's very successful, but we understand, right? People want ownership of their trading, like the zero DT stuff like that. So that's something that we have been doing, for a while now. I've just been posting some stuff most mornings, but we're just consolidating those efforts between Michael and I, and then the community at large in terms of specific stocks that people are trading. Some ways that we're going about that is Michael, he's posting a list of stocks that appear in those key scans that we like to look at. You can also leverage the P2P list. You can leverage the wheel stock because those provide us with great opportunities to the long side. So we shouldn't be dismissing those. But then if you're wanting to put your own system, your own discretionary flair on it, then you have all the liberties to do, right? One of the benefits of Gamma Edge is we can take the thousands of stocks out there, we can hone it in to a list of 5-10 manageable names that you can look at on a day-to-day basis. And from there, the characteristics are favorable, call dominated, above key levels, all that good stuff. And then from there, applying your system to figure out how you want to get into and out of that trade, we have guidelines that you can apply, or the discretionary systems if you want to apply to that. But again, to beat the dead horse, if you have a discretionary trades and whatnot, then we just ask that all that activity takes place here. Michael and I, we're going to still be posting things, as we think of maybe new ways to utilize things, seeing the way that other people are utilizing it, and just kind of getting a discussion on, these names look interesting from maybe an intraday point of view, or a couple day trading point of view, stuff like that. So, Mike, I don't know if you had anything else to add, but that is just kind of what we're thinking about there.
Yeah, I'll just second Taylor's thing. The P-Trans to PGX is I posted my updates from 2025 year to date. Paul posted his reports. The mechanical strategy is sound. It works excellent. Like, there's no reason to change any aspect of that. And I would say the P2P strategy is for people that don't want to watch intraday. They get your signals at night. If you're a 9-to-5 work person, you don't have to worry about watching the market. It is all laid out for you. So you just mechanically follow those. Now, we wish that you would check the education and understand how the strategy works and why it works, so you can develop your own trading strategies. But if you just want mechanical, it works extremely well. So that is not changing at all. And pretty much what Taylor said, I posted my swing trades from last week using the consolidated list. Basically, all I'm doing, I think Taylor said this, but is I'm just comparing the 4 list. And you can add your own list. I know some people use the gamma up, they use the change up. You can compare 5 lists. All I'm doing is going online and using a comparison tool. Taylor loves Excel, so you can pop them in Excel and compare. And then I'm just taking if they populate multiple scans, and then understanding, we would wish also that you look at the education and understand what each scan actually means, as in a structure standpoint, right? And that it's giving you the opportunity for price appreciation. But if you don't want to look at that extensively, then you can just understand that the structure is much more favorable. The environment is much more favorable for price appreciation. Now, are these 100% that these stocks are going to go up? Absolutely not. And what I posted in my swing channel is, or in the swing channel that Taylor and I, and it is MTM driven. So if the MTM is not in your favor, there's really no reason to take a lot of these trades along. 75% of stocks follow the overall trend of the market. A rising tide lifts all boats. So you still want that tailwind of the market trend model. So I just encourage everybody to look at the channel, get used to it, understand it. TA standpoint, we have one of our traders that is using basically a Minervini template, but basically it says it's above the 50-day, above the 200-day, above the 8-day, and the 21-day. So if you're a technical trader also, I think those are very important, right? I mean, I think that just aids to the possible uptrend of the stock. So add your flair and flavor to it and post in there, because we want to know how everybody's using this and how we can continue to develop it. And maybe that's a filter that you add to your own structure. You put it in Excel and you say, is it above the 8-day? Is it above the 21-day? And those are only the stocks I'm going to take. And those are the high conviction stocks. You can see from the list we post, I'm not looking at 100 tickers or 50 tickers. I'm actually narrowing it down. You see my trades last week. I think 7 or 8 tickers is really all I was looking at. Max 10, I think. but those are high conviction trades. And if they don't set up, you don't take them. You don't force these trades, and they have to be around the key levels. Pullbacks to key levels are good entry points, but they have to be crossing above these levels, at the minimum staying above 0 gex and p-trans to be in a favorable environment also. So anyway, a lot of information there, but hopefully that explains kind of how I look at the overall structure and how we kind of leverage these scans. But, yeah. Anything to add? Good. Cool. All right. Taylor's on mute again.
No, I'm here. No,
Okay.
I'm trying to pull up the web app right now.
Okay, cool.
So I was trying to look at what next week was shaping up to look like right now. A little bit of
Yeah.
So I got overnight. Obviously, keep in mind it's just overnight, Sunday night. A little bit of a sell-off so far, but
I think
That
Chuck
is
has a good
long.
question. Chuck has a good question about weekly expirations. I think you talked about this today, Paul, about Tuesday, Thursday, low OI. So I think that kind of what Chuck was getting to. And we've talked about this before about Monday positioning for weekly options. I think a lot of traders do that. So positioning Monday, Tuesday for weekly expiries.
Yeah, Chuck, I see your question. If you're trading weekly expirations, would you follow the same process as the 0DT? The short answer is yes. It all starts with the MTM. So we step one. That's why it's step one in everything I do. Taylor talks about it when he talks about the swing game plan. You got to know what the market's doing. So that block of your daily process, whether it's the 0DTE, it's looking at stocks that have weekly expiries, swing stocks, whatever the case may be, swing trades, everything begins with the 0DTE. So fundamentally, the answer is yes. I laid out in the Discord actually, I think it was in our main chat channel instead of a technical questions channel. Probably is better suited for technical questions, but excuse me. Kind of laid out how I would approach if you were to look at multiple day things, right? I don't want to dissuade anyone from attempting to swing the SPX. In fact, I think the SPXA can be swung because it's not as it doesn't have the velocity that the SPXP does. But I laid out, and I would urge you, Chuck, to go into the main chat channel there, and I present. Taylor had up earlier. He had up the dashboard, and in the upper right-hand corner, as he had said earlier, we've got all the expiries, and you can see how they're multicolored or multi-shaded, right? Some are really, really bright purple there, and other ones are very, very much dark, and it goes to exactly what he was just circling there. It's if you take all of the expiries and you just kind of put them in 4 buckets, which bucket has the most in there, and that's the brightest ones. Now, why is that important? So exactly what we have here, when you look at that, so this is looking now at the upper quartile stock or upper quartile expiries. When we were developing the DBH tool, the Delta Balance, and the history tool, I don't know if many of you were around at that time, but every night we'd post kind of this waterfall of day over day, what were the signals on a day over day basis, right? What was the delta balance? And we did this in Excel for, gosh, I don't know, months, right? Painstaking. And what you didn't see was that I was actually looking, what if we go out further than a week? What if we go out 2 weeks, 3 weeks, a month, and whatever the case may be? So to your question, when you start looking at weekly expiries, like in the SPX, which expire every day, you do have weekdays, and you can see 2 of them right there, right? You can see out of the 6 days that are in the top there, right? We've got weakness that are on the 15th, which is a Thursday, and then the following Monday, which is going to be the 19th, or the 20th, excuse me, because of Martin Luther King Day. Why that's important is those expiries, and Taylor, humor me a second. Just click on the 15th right now. Look at the open interest there, right? The total open interest is only 63,000 contracts. Normally, for 0 DTE, we're well north of 200,000, recently we've been pushing 300,000. So anywhere between 200,000 and 350,000 contracts. So in the next 4 days, Thursday is going to go from 62,000 contracts, likely triple, quadruple, maybe go 5x in terms of how people are positioning. Why that's important to your question is you're talking about trading weeklies, Friday. So if you were just to say, I'm going to trade the SPX for Friday, or I'm going to trade Apple for Friday, or whatever the case may be, we could have a fairly significant ground shift just because of the weakness that is possible there. So I think, and I think we have to, and Big Don posted a summary in the chat here today, which I think is a good one. I would urge everyone that's got access to the Discord to go read it. But the takeaway is this. Every trade starts with a 0 DTE. And if your thesis is intact at the end of the day, you can start swinging. And this goes whether you're doing stocks, it goes whether you're doing SPX, SPY, Qs, I don't care. But you've got to know where your thesis gets invalidated. Because hope, as Taylor said, hope is not a strategy. And we can't help you with that. So we're going to see a lot of stuff go in for Thursday. If it supports your thesis, keep holding the trade. If you start seeing it roll off, close that trade. Hope is not a strategy because you could get a whole big shift on Friday. So that's how things would be different in comparing to the 0 DTE, because now you have what we call path dependency. And the path dependency is accelerated in the SPX, the SPY, and the Qs because they turn over so fast. So just be aware of that. Is that, guys, I capture that?
Yep, perfect.
Yep. Yep, 100%. Let's see. Sweet.
Oh, I didn't say one thing that I was going to say about the Delta Balance tool when we were developing that. There's a reason the Delta Balance tool has a limited look ahead. And it's because we found that beyond about 6 days, it's a coin toss in the SPX. So,
Yeah.
and SPY in the Qs. So they're not the same animal as, say, trading Apple or Meta or, the big stocks. So just keep that in mind as you play around with it. That's all.
Yep. All right, awesome. Don't know if there's many other questions. Yeah, one thing someone brought up, just so you know, let me refresh. Earnings seasons are starting, so to the extent you have positions and names, just be cognizant of when those earnings are. We got banks coming out starting Tuesday.
Yeah, I think it was Tom. Tom brought that up. Hard Dog. Thanks, Tom.
Yeah, we always got that. I don't want to sign in, so we will keep refreshing. Yeah, see, week after that, got some Mag 7 starting. Week after that, it's to restart a lot starting. So last week of the month, you start to really ramp it up, but this week starting the banks. That always kicks off earnings season. So
Yeah.
make sure you're cognizant of that stuff.
Yeah.
Let's see what else. I don't think there's really a ton else. Yeah, just showing this, just closing the loop on the P2P stuff, right? The mechanical strategy. Sure, mechanical strategy is not sexy doing it every day, but like ultimately at the end of the day, this is all you care about is an upward sloping P&L curve. So, right, 126 trades on the year, 90 win or 71% win rate. That's right in line with back testing, 75% high win rate, profit factor, 5 to 1, pretty good. Yeah, so don't know what else you want aside from this. So yes, there was some drawdown, but every strategy is going to have drawdown.
Yeah, and
go ahead.
I think it's important, Mike. Part of it is putting the strategy out there, but people get fatigued, right? Executing the same thing. And kudos to you. You've been doing this since June 30th of 23. And I know there's been, I have a thing on my monitor here. It says flawless execution, right? Just as a reminder that we can always get better. I know it's hard to do flawless execution on any of these strategies, but I think you're really showing this is what pretty damn good execution is. So, kudos. And I think your basis was 100K, right?
Yeah. So 21%. So, and actually closed 2 trades that were from December and January. So TradeZilla doesn't show it the first week. So those were actually winners too. Amazon was one of them. So yeah, it worked out good. So, but no, and I even missed a couple because I was on vacation for 2 weeks and I actually missed some exits, and I actually did not take entries because for a few days I didn't have Wi-Fi. So, so just, stick with it. Keep doing what we're doing. So,
yeah. And George, to your comment about riding along, like that's literally the point of the strategy. Is it helps you capture the meat of the move, right? Leveraging the market trend model when that is constructive, or entering new trades. When the market's ripping, strategy does well. When the market's not ripping, yes, you're going to have some drawdown, but we have rules in place to making sure that we're not making that drawdown worse, i.e., continuing to buy when the market is not showing any evidence that it wants to move higher.
Right.
So,
yeah, in that drawdown period, I think I only had 50% exposure on the portfolio, and that was just the essence of TC3 turning off. So we just quit entering positions, and then when the market started coming back up, obviously we exited those positions that were underwater, but then the new positions that roll in, completely your profit factor outweighs what you lost on the down move, and you can see that's exactly what happened. So, and we just follow that cycle over and over again. So
rinse repeat.
That's right. Yep.
And Nero and other traders, they've done their own little tweaks on the knobs because they can. And he had a stellar year with this as the base, right? So hence why we're really supportive of everyone going up into the swing channel. And if you use P2P as your foundation and then swing off of it and do certain things, by all means do that. We really support that.
Yeah, and on top of that, I think most of the people that, from what I've seen, is they use the P2P as base, and this exit strategy is if you get the signal the night, you exit the next morning. What I've noticed is a lot of people that have been posting, they actually exit intraday. Now, that's very difficult to back test. The stock can go much higher the next day. It can gap up higher. The structure can advance. But that is also a very sound strategy, exiting at PGX, because that's what the strategy is. So if it taps it intraday and you exit, you may be leaving some profit on the table. You may be, not getting a drawdown in the morning, but it's a very valid strategy that's discretionary, but that matches also P2P. So, personally for me, how I do it is I would take part of the position off if we tap PGX and then leave a runner position on. And then if we get a gap up and continue, then you're still capturing the upside. Not as much as your full position, but it allows you to capture some upside too. So, but anyway.
Yeah, and I will say I can with EdgeRater, I can test end of day exits using the closing price.
Yeah.
And it actually is less. It underperforms over, 2,600 trades over 14 years or 13 years or whatever the number is now. That doesn't mean that, regimes can't change and that you can make it work. The essence is this: let's not lose the forest through the trees. Once you become comfortable at duplicating the mechanical results, you are free to move about the cabin. You now know you have a base upon which to start tweaking the knobs. Go for it. We do recommend, though, that you at least understand the mechanical strategy so you get a flavor of gains, losses, and things related to that, so that when you start tweaking the knobs, you can be methodical about it and you know which knobs you're tweaking, right? And that'll pay dividends in the long haul.
Yep, agreed. And if you're not matching the base strategy of the mechanical P2P with your gains, then why are you doing what you're doing? I guess is basically is what Paul and I talked about too. If you're not getting 21% from the mechanical, or not getting better than 21%, or at least matching 21% for last year, then I don't know, you probably are overworking yourself other than just doing the mechanical strategy and going to do whatever you want, play golf or go fish, or go ride a bike or go run with Taylor or whatever you want. Your key was stuck, Taylor, so I took you off the screen there. It was just doing zeros across.
Oh, yeah, sorry. No, yeah, I wasn't paying attention.
Oh, good. So
I was looking at a different screen. So, yeah, I guess all that to say, right? We've kind of hit on the depth and the breadth of Gamma Edge tonight. Stream, so we will pump the marketing channel here at the end. We've given 58 minutes of value, so we'll give 30 seconds of tire pumping here. Right, we've hit on the 0DTE, we've hit on the mechanical swing trading, we've hit on how we help discretionary, narrowing down that watch list, finding good candidates, all that stuff. So if you're in the Game Edge community and you feel like you're struggling to find your place within it, please let us know, because we must not be communicating it well, or you're just getting lost on where exactly to be looking. And if you're not in the community and you're interested, right, you can come check us out, 14 days free. And if you don't make any money, we'll refund you. It's not a big deal.
Not the money you lost, not the money you lost.
Not money you lost. Good clarification. AWS already gets all of our money. So
yeah, don't they? Somebody's boat payment.
Yeah, exactly. So yeah, I guess that's what we got. I mean, this isn't just a once a week thing, right? Paul's always in the Discord answering questions. Michael's doing a pre-market chat. I'll try and do a pre-market chat. Try and do an intraday chat. Plenty of access to us, and there's a ton of great traders in Game Edge too that have really know their stuff as well. So,
indeed.
With that, another good hour-long session. I don't see any other questions coming in, so I assume everything we said tonight sunk in perfectly. You guys will all be executing Vol M SPX 0DT strategy to perfection tomorrow. And if not, then Paul will be there to hold your hand with the SPX game plan starting bright and early in the morning. And we'll hit on the discretionary swing trading stuff as well. So with that, appreciate the time, everybody. Michael, Paul, thank you very much. And we'll see you all hopefully tomorrow morning. But if not, same time next week.
Yes, sir.
So, adios.
Thanks, guys. Thanks, everyone.